You're right.
Hello, hi everyone, and welcome to the Run Your Business webinar from Deskera today. Wishing you all a very happy Hari Raya and Eid. Uh, and today we are going to be talking about wholesale business and the biggest problems that wholesale business owners and wholesale businesses face and how we can solve them. Um, now, we have been in this business for the past 12 years or so, and we have spoken to thousands of wholesale businesses. We have had Deskera being used by wholesale businesses over the last 12 years by thousands of customers, and we have spoken to them. And these are the problems that we have identified that nearly all of them had in common, and we help them overcome that. We advise them on how to solve these problems. So we'll be jumping into that. But before that, let me introduce David, my co-host. So David will
Hi,
be
everybody.
yeah. So both me and David will be taking you through this presentation, and then we will be showing you how Deskera can help you solve these problems, or at least some of them. So let's jump into the uh, slides then, and as you know, the topic for today is wholesale business, five biggest problems and their solution. And this is going to be a part of our Run Your Business webinar series. So we'll be covering different businesses, the problems that they face, and their solutions. And we'll be sharing that with you on our YouTube channel. So, a quick view at the wholesale industry here. So, if you look at the distribution specifically for Singapore, and this is a similar distribution that you would find in most Southeast Asian countries, uh, about 30% of all service establishments are doing wholesale or retail, and both wholesale and retail trade together. Uh, I mean, in just the terms of numbers, there are more than 70,000 businesses in Singapore alone who are doing wholesale and retail trade. And they have some very common problems between themselves. So we'll be looking at them. Let's jump right into the top five problems that our data shows wholesale and retail trade businesses face. Number one is inventory shortage and overstocking. Now, when you are in wholesale trade, then you are getting your stuff from the supplier, you're getting items, your stock from the supplier, and you're sending it over to your customers. And it is important to maintain the optimal right amount of inventory in your warehouses. However, it is easier said than done because often you will have received items, but there is no demand for it at that point of time. So you end up storing that item, and eventually you end up overstocking one particular item, whereas you are in constant shortage of another item. And there are factors and metrics that you can actually track to manage this, as well as inventory best practices that we will be going through. David, any uh, uh, what do you have to say about inventory shortage and overstocking? How have you seen customers being impacted by it? And
Well, yeah, it can affect a lot of customers, especially if you have a large warehouse and you have slow moving stock. It just sits there on the shelf, depending on what type of product you have. It may have a time period, or if you have an open warehouse where you have a large area and you store goods outside, especially in humid weather like in Singapore. So, for example, if I was buying large amounts of rebar or wire rod and then selling off to manufacturing construction companies and buying in bulk from supplier, if it doesn't move, it's just sitting there, and then it can rust and eventually turn to dust. And it also keeps up space because that space is a cost. That's something that can be moving out fast and quickly. So it's important to know what's moving, what's not moving, and also the cost on it, because you may have bought it at a very expensive time or the price was higher. And then if the price crashes, all of a sudden you can't sell it and you're stuck with it. So this all has an effect.
thanks, David. Thank you. Let's move on to the second point. That is poor visibility into product profitability. Now, how profitable are the individual products that you are trading in? That is detail that often most of these business owners and finance people were unaware of when we spoke to them. And why is that? The reason behind that is one, as David mentioned earlier, that inventory tracking is not done properly. In fact, before these folks implemented Deskera, they did not have any system to track the cost of goods sold accurately in real time, though. I mean, you can do the end inventory and beginning inventory difference calculation and figure out the stock of goods sold, but that only gives you the cost of goods sold, uh, for a particular period. But if you want to see real time cost of goods sold, let's say based on FIFO, LIFO, or average cost or whatever, then you need to have some kind of a perpetual inventory mechanism in your software, and that or rather the lack of that, the lack of real-time visibility into inventory movement, inventory costs, and the inventory cost of goods sold can leave a blind spot for you when it comes to your product profitability. And this is not just down to your purchase cost and sales price, but there are other factors involved in there as well. There are lots of hidden inventory costs, inventory storage, etc., that you have to be careful of. The manpower that you are going to be spending on moving that inventory around or storing that, or delivering it, etc., transport charges, freight charges, and all of these costs have to be taken into account when you're looking at the profitability of your product, right? And all of this is something that we generally tend to have a blind spot on, because this is not easily or readily visible by looking at your standard inventory reports. So how do we get to that is something that we will talk about. um, David, any thing that you would want to add here?
Yeah, all these additional costs can definitely affect your bottom line. So you may be buying in bulk and getting a very good discount at a very good price, but then are you paying for shipping to your warehouse? Or when you ship out, how are you shipping it to them? What type of additional costs are coming into effect, especially if you have goods that are staying in your warehouse for a long time, that are not moving? You're shipping it from one location to another, and then all of a sudden it's being moved around everywhere just to get it out of the way. And there may be a huge loss in that. You may find that you may have to decide on a hard decision of whether just to remove that product or sell it at a discount to get rid of it, so that you can actually have better stock in there. And knowing the initial cost price of all the goods, like he mentioned, FIFO, LIFO, or moving average, you can tell on a product. So, for example, if a product, you buy it at a certain price in bulk, at that time it was very cheap, but because of market factors, all of a sudden the product crashes in price, then you're stuck with this product that actually, if you sell it now, you'll actually lose money with all that. So you have to also determine that as well.
Thank you, David. Let's move on to the third point, which is a mismatch in customer and supplier demands. Now, this is also a symptom as well as an outcome. And you will start seeing a common theme emerging here, that inventory management, or rather the lack of inventory management, leads to most of these problems. But yeah, there are different ways to solve each of these problems. There are different aspects of inventory management that we will talk about that will help you solve this. Now, what is mismatch in customer and supplier demands? I mean, your customer wants an order to be delivered to them in let's say 30 days, but your supplier is unable to give you those goods in that time period. Or even in times, I mean, there are times when the supplier says that yeah, they will be able to deliver it in 30 days, but what you don't take into consideration is the lead time that it will take for you to deliver this to the customer, because there is a so there are different lead times involved. There is a lead time for the supplier to provide the goods to you, and there is a lead time for you to be able to provide the goods to your customer. And this process, if it is not managed, can lead to a mismatch, and this will eventually lead to the problems that we have seen earlier, which is basically inventory overstocking, or inventory shortage, because if you have more supply than demand, then you will have overstocking, and if you have more demand than supply, then you will end up with shortage. And how to balance that is what we are going to be focusing on. David, any examples that you might have come across of this scenario?
Just thinking off the top of my head, what's it called? Well, recently, toilet paper during this wonderful COVID time. I remember there was not a real major demand for toilet paper, but after COVID hit, all of a sudden you can get a roll. You go down to the aisle and it's all gone. So if you were one of those wholesalers that were buying toilet paper and you were selling it off to everyone, all of a sudden, based upon that time, you may find out your entire warehouse is empty. You misunderstood the demand for it. And all of a sudden you have to increase your orders, stock up more, and then supply it. Same thing with mask during this time and other items like hand sanitizers as well. So that's one example I can see on this, that, people want it immediately. There's a lead time from the manufacturer to get it to your warehouse, and then for you to deliver to all the retail stores for them to sell it out. May not be in the same mindset as a customer who wants it now.
Thank you, David. All right, so let's move to the fourth point, which is understanding your profit margins and your cash flow, and improving them gradually over a period of time. Now, profit margins and cash flow, I don't think we need to spend a lot of time on this, because this is pretty much the case for most businesses. Every business wants to increase or improve their profit margins and cash flow. But specifically for wholesale and retail trade sectors, profit margin and cash flow can be tricky at times, because what happens is that businesses tend to look at aggregate figures. They're not splicing their data into sectors that they can actually get some meaningful insights out of. So, for example, if you have product brands, right? Let's say you are dealing in furniture, right? And you have multiple brands that you have that you are. Seems to be some problem with the camera.
You've disappeared.
Oh, okay.
But we can still see your fourth point.
Well, that's good. So yeah, maybe we can just switch to the slides for the meantime till we figure out what the technical issue was with the camera. Anyways, so as I was talking, the profit margins and cash flows have to be looked not just at the aggregate level, but you also have to break it down by your product brands, by categories. And the example that we were talking about was a furniture dealer, right? Now, if you have multiple brands of furniture that you're getting, and you are looking at your aggregate profit margins, then you're missing out on some important data points here. For example, maybe there is one particular brand that does better than the other when it comes to movement. Not and that is the important part, right? How fast or how quickly is your inventory moving? And there are again KPIs and metrics that you can follow to track that. And that is where we will be focusing our attention on when we talk about profit margins and cash flow here. So moving to the fifth point, and this is again something that most businesses would want faster growth, but wholesale and retail trade sector, wholesale and retail traders see an annual growth rate on an average of 4 to 5%. And if you compare that with other sectors, it is, it's not bad, but it could be a lot better. And one of the challenges that wholesale and retail trades have faced in the past to expand or to grow is reaching out to more customers. Traditionally, the business, how it has worked is that there are contacts that have been present for many years, and then those contacts are what everybody uses to get more business. But when you come to grow, then unless your contacts are good, you're not able to grow faster than you are constrained by your contacts in the world. Now there are ways to grow your business further that we will discuss, which don't rely on or which are not restricted by how many people you know, but rather the process that you follow. David, your thoughts?
Oh, I agree. Definitely. It seems like it's a lot of contacts and meeting people and knowing people for suppliers in the business. But it's also good to know what type of processes you're doing and streamline it and make sure you follow proper process in order to decrease your productivity. So it's not only, oh, I know this guy, I know this guy, I know this guy. I also need to, look outside and see what the best practices are, what's going on. That way I can look at how I can streamline it and become more successful, more beneficial on this.
Great, thank you, David. So let's jump into the solutions for these 5 main problems now. And we start with inventory shortage and overstocking. David, what are your thoughts on these 4 points?
Oh, yeah, definitely. Tracking inventory turnover ratio is very important. You need to know what's fast moving, which is the second one, identifying fast moving, slow moving, and obsolete products or items. No point in having an item that you're never going to sell stuck in your warehouse that continuously needs to be moved, or, and it's taking up space, because that space could be used for another product that's actually providing value add. Optimize your pick, pack, ship process. Definitely. I mean, you have to create your pick list, you have to pack it, and you have to ship it. How are you optimizing it? How much are you putting together? How many deliveries are you doing? Is you're delivering to multiple retail places in the same location? How can you optimize it so that it's delivered in one trip, or do you need multiple trips? Knowing your reorder levels and minimum order quantities, or reorder levels and minimum order quantities. Of course, that way you have safety levels. So that way, okay, at this level, if it goes below this, I should automatically trigger a order to my vendor. That way I'm always able to maintain this much level. And your minimum order quantity, you don't want to sell too low. For example, if I'm selling one to a retailer and I'm only selling one piece of a product, it's going to be probably maybe cost me more shipping it over to him than if I'm selling, if he's buying 10 or 20 products, then I ship it over to him. Because the more I put in there and the more I send off, the cost may be lower than just sending one item. So it's good to know what your minimum order quantity levels are, which will make sure that you have a profitable level.
Thanks, David. Let's go into more detail on each of these points here. Now, inventory turnover ratio is one of the most important metrics or KPIs that you should be tracking. Just to share with you, the formula for this is mentioned here. It is cost of goods sold divided by your average inventory. Now, an average inventory is typically taken by the average of your start and close inventory, or you can just pick up any inventory level that is the average value that you have seen over a period of time for any given period, and then use that to calculate this. And you can get your cost of goods sold by simply opening your product or stock report, and it will give you the cost of goods sold for that particular item or for your overall inventory. Now, what is a good number, you may ask? What is a good number for inventory turnover ratio? Industry standard is around, somewhere between 4 and 6. So if your inventory turnover is, if your inventory turnover ratio is anywhere in the range of 4 to 6, then that's good. But if it is lower than that, then you might want to look at your inventory processes, whether you have obsolete or slow moving items. And if it is higher, then very good, but you can always improve. Having said that, don't go by this standard or the number. What you should be looking at is, number one, you should be tracking your inventory turnover ratio. You should start tracking it if you're not doing it already. And then your plan should be to move the needle up. You want to have a higher inventory turnover ratio. And in order to achieve that, you would want to identify your obsolete and slow items, and you would want to start phasing them out or getting rid of them. Don't keep them if they are not moving. I mean, it's as simple as that. And we were surprised. So there is a report in Deskera, which is the inventory aging report. And people, when they saw that report, they were surprised to see that they had items sitting in their warehouse for more than 180 days or more than 365 days in some cases. When they had supposed that okay, these items would already have cleared out, so they were not even aware that okay, there are so many items sitting for so long and they're not moving, and they're just taking up inventory space. They are taking up manpower cost, because when you do your cycle counts, you have to count them, you have to keep, and you have to keep them updated, and they're not finding the right buyers. So getting rid of those slow and obsolete items is important. And also tracking this inventory turnover ratio will let you know if you are doing if you are falling short, or if you are overstocking, because if your inventory turnover ratio is going down, then it means that your average inventory is increasing probably, and that might be the because of overstocking. Then optimizing the pick, pack, and ship process. So pick, pack, and ship is a detailed process that you can do manually. You can do some automation. You can do a lot of automation there. But the important part is to get your process right. Now you can do a pick, pack, ship by every time there is an order to be sent, you just email that over to your warehouse manager saying, hey, I need this picked and packed and shipped today, and that would be the end of it, right? I mean, that is also technically pick, pack, ship, because you're sending out an email, then that person goes there, he looks around the warehouse, he finds okay where these things are, and then they put that into packing carton or bags or whatever, and then they ship it out. But having a well-defined process is where the difference will come in, and you will start seeing the difference in how quickly you can process orders, and you can do it at scale. For example, once you receive an order from a customer, correct, uh, a copy of that order is automatically sent through your workflow automation mechanism to the warehouse manager, and they can access it anytime, either on their phone or in their system, and they can see that okay, these are the orders that I have to fulfill on any given day in advance. Then they can plan for it, number one. Two, if you are using location tracking and warehouse tracking in your system, then you know the exact location of the item. So the person who is doing the actual picking does not have to, kind of run around trying to figure out where all the items are. They know exactly, because when you create the order, then the system will tell you that okay, you can pick these from these aisles, from this location, from this warehouse, etc. And what you would want to do is you would want to share this information. You can do it through a system, you can do it manually also, that's okay. It's the process is the important thing, please remember that. uh, if you are sending an order to be fulfilled to your warehouse guys, uh, keep a track of your goods, where they are stored, and that order should include that information. That makes it a lot easier and faster to do the pick, pack, ship. Now once you have picked the items, then for packing, it is recommended that you have a proper packing space which is separate from the picking space, and you pack stuff there. Why is that done? Because then you can get one entire batch together, and then you can sort it by location, by customer, by date, etc., and even by the courier who is going to deliver that shipment. And that will allow you to properly categorize your different packs or your cartons, uh, to be shipped out in an optimized way. Uh, Primarily, what happened? I mean, what we saw was that the packing process was not coordinated. So, uh, I mean, there are so many instances that we observed wherein packing was done, and then it was, I mean, that for the same day, same customer, different packings were done, because one, the order went to different folks who did it at different times, and then they packed it at different times, individually, and then they send it out. But if you don't, if you don't have that packing area or packing space where everything first comes in and then you start packing that, then that problem is going to keep happening. Only when you start seeing things together is when you will be able to make out, okay, this is how I can categorize it and do it better. And then reorder levels and minimum order quantities. So reorder levels can be calculated using, I mean, there are some complex formulas that you can use, but one easy formula is that uh, as soon as that, one simple way to calculate reorder levels is to you factor in your vendor's lead time or the supplier's lead time for delivering the goods, and compare that with the demand that you foresee by forecasting your demand based on historical inventory reports. And that will give, and a ratio of that will give you an indicator of whether you are uh, uh, of how you should be, or creating this reorder level. Right now, I mean, once you have your reorder levels in, then you want to keep a track of your reorder levels by getting your notifications on time. Anytime any particular product is going below the reorder level, then you want that notification to come to you. And your reorder can be automated for your preferred vendors by defining the minimum order quantities as well. So again, minimum order quantities will be a function of your reorder levels, lead time, cost, etc. Um, but once you have your minimum order quantities, then you can set a rule that anytime any product goes below the reorder level, then you create a purchase order automatically for your supplier using the minimum order quantity to get that uh, back into your warehouse. That way you will avoid inventory shortage, especially for fast moving goods, and you will always have customers happy because you are able to deliver on time. David, anything you would want to add here?
Oh yeah. I was just thinking of the pick, pack, ship process. One thing that's important is to track your default delivery in full and on time. And you may want to look at your deliveries and see your reports and deliveries and see how many deliveries are there per day, and determine, you may want to ask and see, okay, I only have one delivery this day, so it won't fill up my entire truck. So for example, if I have a truck, I'm filling up the goods. But the other day, I have the full orders and I can actually move this delivery on over. So I can say, okay, maybe I can contact my customer and ask him, can I change the delivery date to this day? That way I can optimize my shipping. That way I always have a full load and I'm reducing my cost. Whereas, for example, if I'm just delivering one item in the truck and it's going out and going back in, going out, going back in, you may actually be charged based upon number of deliveries for the truck. The truck driver may be paid based upon that. So it may be important to optimize your deliveries and look at putting them all in one truck, and then look at your default and see, based upon your deliveries, what dates need to be changed or what type of deliveries need to be changed in order to optimize your shipping.
All right, awesome. Thanks, David. Let's talk about product profitability now. Right now, one of the problems that we saw our customers faced was tracking cost of goods sold accurately. Now, how can you track your cost of goods sold accurately? One, I mean, you need to have a proper accounting system that can give you that information in real time. You don't want to rely on your information to be generated and then somebody to process it, and then at the end of the week or the month or the quarter, you get to know that number. No, you want to keep track of it on a more regular basis, right? Again, I mean, it depends on your business, but yeah, I mean, the more regular you are about these costs, better decisions can be, you can take better decisions based on that. Okay. Once you have your cost of goods sold in place, and yeah, the important part here is that your cost of goods sold is not just the purchase cost, it is other additional costs that you have also incurred, right? So that would be the purchase cost plus freight costs or transportation costs. It could be duty that you have to incur to get those items from an overseas port into your warehouse. It could be other miscellaneous labor charges, moving charges, etc. That you encounter. And also, there are ways to factor in storage costs as well. If there is any additional storage that is required, then you should definitely factor that in as well. So those are the factors that you would definitely want to uh, uh, take into consideration when you're looking at cost of goods sold. Now, how will that help? Because you will be able to eventually get cost of goods sold for a product by a particular vendor. Now, why is that important? How Imagine you have two suppliers. One of them actually charges you a little bit more, but they are able to deliver goods faster to you, and they are a local supplier, whereas the other supplier is overseas, and they charge a lot less to you, but it takes longer for them to deliver their goods. And obviously, there are additional costs involved like shipping, transportation, freight, duty, etc. Then you need to do this math first that, okay, what is my cost of goods sold uh, for, or rather in this case, cost of goods sold, or you can you can also categorize it as landed cost, that what is going to be my landed cost or the final cost of goods sold if I order from supplier 1 versus supplier 2. And sometimes if we are only going by the purchase cost, then we may end up picking the wrong supplier. You have to do this calculation before you select a supplier. Then track your profitability by product categories and brands. Now, often we want to obviously diversify and have product substitutes available, because you will get different requirements from different customers for different products and different brands, and you want to be able to stock all of it. But if you're not tracking your profitability by a particular category of products or by brand of products, then you're missing out on a trove of information that will allow you to focus on what matters more to your business, right? As David pointed out earlier as well, that I mean, you don't want to have slow-moving or obsolete items that are not moving at all or moving really slowly in your warehouse, because there is a cost associated with that. There are so many hidden costs for inventory that just keep adding up if those items, especially, are staying with you. And one indicator of that was earlier, as we saw, inventory turnover ratio, but also the profitability by those categories and brands will help you to zero down on what are the things that are keeping your inventory ratio low, for example. Now, if you are not tracking it, then there are easy ways to track it. If you, for example, if you're using Deskera, then, and we'll see that later on, that you can actually create custom attributes. So you can track profitability for any given product by a category or a brand or any other attribute that you want to track by. I mean, how is that useful? Let's say that you have t-shirts and they come in multiple colors. Now, do you know which color t-shirts move fastest between them, right? Or is it something that you can quickly find out and then base your next purchase order on that? If, let's say, you have three colors and the red color is selling more, then you want to make sure that your inventory turnover ratio is at a nice number and you're not going into inventory shortage. So you should be able to order more of that, and the minimum order quantities and the reorder levels for the red t-shirt should be higher, or they should align with the movement of that particular item. But if you're not tracking your product using those attributes, then it becomes a lot more difficult for you to know and then make these decisions, which will eventually again lead to either inventory shortage or overstocking, and that is what you want to avoid. David, what kind of hidden inventory costs have you seen some of our customers encounter, and uh, I mean, what was their reaction when they
Oh yeah,
kind
I
of?
mean, they're quite surprised. They're like, sometimes the mindset is very simple, like, okay, I bought it at this price, I sell it at a higher price, I make a profit. But that may not always be the case. For example, you had people that were taking care of the product, moving it in and out. Then you have your transportation fees, storage fees, your delivery fees. Based upon your arrangement with the vendor, maybe you have to also pay for the delivery of the product into your warehouse. And then when you delivered it, was it a fully stocked transport that delivered it out, or was it just one product? That'll also change the cost, because the transport cost is the same. So whether you deliver all of them or just deliver one, it could be changing the cost as well. So these are all things that apply. And once they see that, then they can see their profit margin shrinking for certain items and increasing for other items, especially for slow moving products.
Thanks, David. Let's move on to the next point, which is mismatch in customer and supplier demands. Now, what is the outcome of a mismatch here in customer and supplier demands? Obviously, what is going to happen is that one outcome is, again, it will come back to your inventory. Either you will have shortage or overstocking, right? Two, your relationship with your suppliers and your customers is not going to be a very happy one at times, because your customer wants something, they do not have it on time, or you want something from your supplier and they are not able to deliver it on time, and this mismatch overall leads to a breakdown of relationships that you don't want to happen between your customers, your suppliers, and yourself. And how do we avoid that? And how can we reduce such mismatches between demand and supply? One way is to back order immediately as soon as you reach your threshold levels, or as soon as you reach zero stock, and you receive an order from your customer that says, "Hey, I need this." Have a mechanism to create a back order immediately so that you can fulfill those orders on time, and also at the same time be clear about your lead times to your customers so that they do not have any unfair expectations of you. Now, one way to do that is to track your future inventory in and inventory out. So, for example, we have a report in Deskera books that tells you how many orders you are still supposed to receive from your suppliers and how many orders you have to fulfill or that are pending fulfillment to your customers. And that report can actually give you a good idea of the mismatch in supply and demand that you might face over the next quarter or month or week or whatever, depends on your business, the time frame that you're looking at, right? And you can then plan for not falling into that trap of the mismatch between supply and demand. Another important thing which we mentioned earlier as well was that do not just rank suppliers on cost. Use lead times, quality, and cost, and there are different formulations available for it. Again, it depends on your business and what kind of goods you are into and who your customers are, but you should try to factor all three things together. Give them a weight according to their importance for your business and for your customers and the kind of goods that you deal with in. But make sure that you have a ranking mechanism that takes into account all three things at the least. You can add other parameters as well. But yeah, these three you should be taking into account. Most businesses that we spoke to were only looking at cost or maximum lead time. But nobody was looking at all three, and that was a surprise. So yeah, I mean, it has to be these three, because if you're not doing it, then you would be compromising on on multiple things, which includes your customer satisfaction, your actual landed costs, and the time to deliver. And all these three things can stop you from growing faster than you would want. David, what are your thoughts on this?
Oh, I agree completely. You have to rank your vendors correctly. There's no point if it's cheap and the lead time is instant, but every time you send it out, the customer returns it. It's bad for your reputation and it's not good. You get it cheap, but the thing is you have to deliver to your customers. The customers have to receive it and then be able to sell it to their customers as well. And so you don't want any returns or anything like that because of poor quality. I've seen this in different types of business scenarios, where, for example, rebar, for example, you buy from one supplier, it comes in, it's brown in color, not that wonderful steel color, it's brown, you take out the brush, and it's because it's rusted. And then, if you try to send it off to another customer, that will eventually sell it to somebody else, it won't work. You know what I mean? Because like if you try to ship it off to the US and then they're going to send it to someone else, they have different standards and they may just reject it. And then if you're delivering to other countries, it gets stuck there, then you have to return it back. That's an additional cost to you. All of a sudden, you have to pay more money for that to come back. And then you have a tough decision. Is it going to cost me more to dispose of it in that country, meaning I just rather just dispose of it there, or ship it back and bring it back in? So you have to determine all of this. So quality does play a major important part of this, as well as lead time and cost, because all these factors can cause you additional costs later on.
Thanks, David. And obviously, ranking your suppliers would allow you to know who your preferred vendors are. And these are the vendors that you would look to whenever you hit your threshold levels and your reorder levels, right? Because you want to make sure that you don't fall into your inventory shortage trap. So with that, let's move on to the next point, which is profit margins and cash flow. Now, how can you improve your profit margin and cash flow? I mean, one answer is a very global answer that, yeah, I mean, you increase your revenue and you reduce your costs and your profit margins are going to improve. So, I mean, that's universally true, but how do we do that, correct? One of the biggest costs that wholesale and retail traders face is not exactly retail traders, but wholesale traders more, is inventory storage costs. With the advent of drop shipping, you can completely remove that cost, right? You do not have to worry about inventory being stored. If you use dropship, then the item is shipped directly from your supplier to your customer. You don't get into the picture at all. And that is going to be super helpful for your business, because you don't have to worry about receiving those goods, moving them to your warehouse, moving them out of your warehouse, worrying about people that are supposed to move it, the duty that you have to pay, whether that item is going bad or not, etc. In your warehouse. If there are people who are going to buy it, what if the supplier delays it while it is coming to my warehouse, or what if there is a delay in me sending the goods from my warehouse to the customer, because maybe there was somebody fell sick, or maybe there was some event because of which the roads were closed, etc. I mean, there are so many factors that you get completely rid of, and you have a peaceful night of sleep because you're using drop shipping. Obviously, there are going to be some cons there as well that you should be aware of. As it is with everything, there are always pros and cons, and you have to figure out what your how you overcome those cons while getting all the pros. So the biggest objection that I heard to drop shipping was that you do not control the quality of the goods at all, correct? Because you are not even seeing, for example, the inventory that is being shipped from your supplier to your customer. What if the supplier sends poor quality of inventory? Then your customer is not going to go and blame the supplier. He's going to come and blame you, because you are the one who's responsible for that. And there are ways that you can manage that, correct? So one way is to obviously, as we discussed in the last slide, rank your suppliers, do quality checks on them, include the quality factor in when you are ranking your suppliers. Because if you're not doing that, then you will keep getting this complaint, even if you want to use dropship, that the quality is not good, and you will ultimately end up losing that customer probably. So that is something that you definitely want to not go with. David, what about the other points? Would you like to elaborate on the other points?
Oh yeah, definitely make it easier to get paid with online option. That's definitely good. I mean, you get the money, it goes directly into your bank. You don't have to worry about checks clearing or anything like that. And it's good to connect and send out the payment links to the customers, or even if it's recurring payment, have the recurring payment there. So that way it's always going right to your bank. Reduce inventory costs. Yes, definitely important to reduce inventory costs, especially for products. So you want to bring in the products, you want them fast moving, coming in and out, and you don't want them coming back, because if they come back and there's some complaints on it, then you may have to have people there that'll fix it. It reminds me of a case where, for example, you can imagine like you buy furniture from a manufacturer, it comes into you, and then you sell it to a retail business that sells furniture, and they're coming back and saying there's sharp edges, there's different items, and then you have to sand it down. So that's also causes an increase of the inventory cost, because you have to keep it in there, you have to fix it, then resend it out. So it's important to reduce inventory costs. Control forex gain and loss and transaction fees. I think you're better to speak on that than I am.
Right. Thank you, David. So, forex gain loss, right? I mean, if you are in wholesale trading, then chances are that you will have overseas suppliers and overseas customers, and your transaction fees for foreign currency transactions can eat into your profit margins without you realizing it. Right now, how can you avoid that? Correct. More often than not, when we are doing these transactions, then we are just using the default providers that are available to us, maybe our banks or checks or whatever, and that is probably not the best way to go about it, because there are services available today that allow you to cut down on your foreign currency transaction fees significantly. For example, recently Deskera tied up with TransferWise, and now we have made it super easy for users to send foreign currency transactions at the lowest possible fees. And that's the kind of arrangement that Deskera has brought for you, wherein you can cut down significantly on the foreign transaction fees and get the best possible rates, with the system. Plus, you should be aware of your forex gain loss, and you would want to avoid that wherever possible. So, if you're getting into a contract with a supplier or a customer, then you may want to fix the exchange rates at which you will operate. Of course, it is not always possible, and it is going to be based on the relative size of who you are dealing with as well. For example, if a small business is dealing with, let's say, $1 billion business, then they may not have so much say in whether they can fix an exchange rate or not. I mean, that's always there, but you should try to control that wherever possible and manage that, and couple that with your reduction of transaction fees, and that will allow you to cut down on these small but multiple costs that keep piling up without you realizing it, because they are hidden away in some forex currency gain loss section, or admin transaction fees, etc. In fact, there was a study done by the Singapore government, and admin and transaction fees actually are the third biggest cost factor for wholesale and retail trade sector. So you definitely want to cut down on that, or to figure out a better way of doing it. One recommended way is obviously you can use Deskera plus TransferWise to cut down on that. But yeah, I mean, take your pick. But yeah, I mean, the point is, if you're not looking at this, then you have to start looking at these costs as well, because they eat slowly into your profits without you realizing it. And yes, of course, maintain price list and use volume based pricing. This will help you to both reduce your costs and to increase your revenue. Now, how is that going to happen? Now, if you are running volume based pricing, then there is always an incentive for users to buy more volume, right? I mean, and have that out in a transparent way. If you're not doing volume-based pricing, then you should definitely do that, especially in the wholesale trade. I mean, you would be doing it to a certain extent, but are you providing enough tiers? Because you want people to buy more, that will help you with your inventory turnover. One, obviously, if people are buying more, then you will end up, generating more revenue as well. And use the same technique with your suppliers, wherein if you are purchasing more, then you want to drive the cost down. Never take or buy at the same cost if you're buying more, and always look for a supplier who's willing to give you better volume based pricing, obviously keeping into account your lead times and your costs as well. So that will automatically help you, one, improve your revenue and cut down your cost. It will also reduce your inventory cost and improve your inventory turnover ratio. So, with that, let's move to the last point, and this is the most important for any business, but especially for wholesale and retail trade sectors, because traditionally they have found it harder to grow internationally or to grow beyond the location that they are in. Why? Because there is generally an investment required for setting up your warehouse, for setting up your supply chains, etc. And these have been limiting factors in the past, which is why traditionally CAGR has been somewhere between 3 to 5%, or in that range for wholesale and trade sector. Whereas others, even F&B has grown faster than wholesale and retail trade sectors in the past. So obviously there have been, as I said, limiting factors there, but now you are in a position uh, to remove those boundaries, remove those constraints completely. And how you can do that today, in by digitalization of your business and your business processes, you can expand internationally without investing huge quantities or huge amounts in setting up your warehouses, hiring people, getting into all the headache of company setup, etc. It's not necessary anymore. What you need is your website, your store, and a blog. I'll tell you why you need the blog, right? What is the website going to do? It is going to obviously set you up on the web, on the internet. The store is where people can come and immediately buy or items, or they can put orders with you. Now you may ask that why do I need my own online store? Why can't I just use Amazon or Alibaba or any other all these available online options? uh, you definitely should be there as well. Don't have You should have a presence on these, but you should also have your online store. Why? Eventually, over a period of time, what you want to do is that once you acquire customers from these online stores initially, you want to start moving them slowly to your online store. uh, the obvious reason is because then you don't have to pay commission to Amazon or Alibaba or anybody else, right? uh, so you can use these channels or these platforms to acquire customer, but you still should have your own online store where you want to move your customers to gradually. And doing that will help you to cut down those commissions and then obviously increase your margin. And how do we do that? One way is that once you get your customer details, right, make sure you're running email campaigns, right? Run email campaigns with your customers to reach out to them, let them know that you are there. Emails are one of the cheapest possible ways to reach out and do mass marketing without having to spend too much time or effort. But yes, you need to have content to share with your customers, and the right kind of content, and that is where your blog comes into the play, right? You can create content that stays forever, but you can use that content from the blog to configure your email campaigns. One very simple idea to run your email campaign is have a series of articles. So let's say you are dealing in watches. Let's say you are a wholesale trader for watches, correct? Then you can have a blog that talks about the qualities of watches for from different brands, and what are the advantages, for example, on ordering watches from you versus anybody else, and how can a person identify a good watch from a fake watch, for example, right? I mean, there are so many things that you can talk about, and this is the kind of content then that you can share to keep your people engaged, and then you can always pitch in with with your offers and discounts and whatnot. Give Let them know that you are there, that you have a store, And this will also help you with your SEO. It will help you with your Google search rankings. You will be able to appear in search results most of the time. If you you can easily check through Google Analytics what your competition score is like, right? And even if you have a presence on the internet for your niche, then that should be more than sufficient to start propelling you into Google searches. Have an online directory. Be present on Google businesses, right? Make your presence felt online, because everybody's moving online. I mean, we all know that, right? So there is absolutely no reason why you shouldn't have an SEO optimized website. There is no reason why you should not have an e-commerce store. There is no reason why you should not have a blog to attract more visitors to your uh, website. And once you have these visitors coming, or you are acquiring them through other platforms like Alibaba or Amazon or whatever, there is no reason why you should not be running email campaigns for them to get them to order more. And uh, with all of this in place, you also want to start implementing a social media strategy. So a social media strategy doesn't have to be too complicated, right? Just talk about what you do as a business. I mean, that's it. And make sure you use the right hashtags, which you can easily a quick Google search will tell you what the what the right hashtags are for the topic that you are talking about. And that will just allow you to start building that presence. And then again, once you have people engaging with you on social media, or even if they're not engaging with you, you are at least reaching an audience there. Now people know that, okay, you exist, and if and they start seeing you as an alternative over a period of time. And that is what will help you to grow eventually. Obviously, the more effort and the more marketing that you put into this, the faster you will grow. And if you want more details about how to market better, then we have this excellent article on our blog. We'll put the link in our description later on, which is basically there are 75 tips to improve your marketing in that article that we have on our Deskera blog, and we'll put the link in the description later. But with that, we are at the end of the slides here. Now, how Deskera can help, and David will show us how all of these things can be done in Deskera. And over to you, David, to uh, take us through how Deskera can do all of these things, and maybe a little bit more as well.
All right. So here I'm at the dashboard. I'm going to first go to reports, as that's what we were discussing earlier. And you can see here we have the stock availability by warehouse, the stock ledger, stock aging report. So inside here, I can see my slow moving and fast moving quantity, like 91 to 120 days. I can see I have 6 quantity here for keyboards that have not moved out. Yet I ordered another 100 keyboards in this last 30 days. Why am I ordering so many when I have some here? Also, for example, laptops, 41 laptops here from 91 to 120 days. But yet I just purchased a new laptop just recently. So it's important to know how much stock you have, what's moving, what's not moving. You may find you have stock inside your warehouse that you didn't even realize you still had, and you're reordering the stock again. So it's good to know how your stock's moving. We have, of course, the stock ledger report. So inside here, I can see my stock going in and stock going out for my quantity. I can expand it, and I can see exactly opening, stock adjustment, bills, stock adjustment, bills. So I can see everything here. My computer sets. I can see the contact's name here on who's buying it and who am I buying it from. Inside the warehouse, let's go back to the reports. We also have stock inventory valuation report, sales return report, so I can see who's returning the product, meaning, for example, Austin Circuits returned this mouse. Maybe it was from a bad vendor. They returned it. So I can see this information here. And I can also see purchase return report here. So if I have any purchase returns, I can see it here. And if I see the same vendor's name over and over and over again, I know something's up. So that way I can make a decision. Maybe I shouldn't go with this vendor anymore, because for some reason I'm always returning the goods. The cost may not be worth it. We can also scroll down and we can see our different reports here. So for example, our age receivables, quotation inventory list. Sales by product, so I can see my different sales based on my products inside here as well. All right, so let's now go to, we can go to products first, and we can see all our different products in here. And I can see my product name, my category, stock availability, is it active? I have my different filters here. So I can filter by status, products, what product, and I also can add in custom fields. So if I have any custom fields here, I can add it in. For example, he mentioned earlier color. So I can filter out blue, green, red. And I can also do the same thing on the sell and buy screen as well. So inside here, I can see my orders, I can see my bills, and I can see my different information. So if I drill into this one, I can see, okay, these are all my different products I'm buying in bulk. I can see the discount given here. For example, the vendor has given me a 20% discount. I can see the amount here and the discount amount and the total and the outstanding.
So let's take a look at the profit and loss report.
Oh yeah, sure.
Which shows the cost of goods sold and the different expenses. And then we can see how we can filter that using custom fields as well.
All right, so inside here, I can see my profit and loss report. So I can see my cost of goods sold, expenses, other income, and other expenses. And I have a choice here of accrual or cash based upon my requirements. And again, we also have our filters here. So I can add a filter. Again, I can select a custom field. So I have all my different custom fields here. And I can filter them out accordingly. So for example, maybe, let's see. Maybe my invoices I want to filter out by, for example, outlets. Maybe I have different outlet locations throughout the place. So I just want to see my different outlets and how it's doing. Let's see. Save, and let's see the filter. And I can see here, of course, this is my for Los Angeles. I see my cost of goods sold, expenses, because you may have multiple warehouses in multiple locations. You may have different areas that you want to keep track, so you can also use that as a custom field. And I can see here my cost of goods sold, my income, and profit before tax and net profit before loss. So I can see that all here as well. We also have, of course, our balance sheet, cash flow statement, our general ledger, and our trial balance, all the financial reports you would expect. Under purchases, we can also see our purchase order list, our purchase by products, all here as well, and outstanding purchase goods received report. So we can see any outstandings here. So I can see what we have not received yet. So that's also good to know because, for example, if I order a quantity and I didn't realize that I ordered it, and then I create a new order, then maybe I'll have too much stock coming in. So that way I have visibility.
Another place where this will be useful, David, is, and we have a similar report for fulfillment as well. So this will tell you what is the future demand or the future supply that you have. And you can then do a comparison between the two to get an indication of how your inventory is going to look like if you do not have any additional orders, etc., coming through. And this can be then superimposed with your historical inventory data to actually do one level of forecasting of what your inventory stocks are going to look like if you continue with the same trends of ordering as you did, last year or last month or whatever.
Yep. And for example, you were talking earlier about you may have multiple orders when you're doing pick, pack, ship. You may have people that are all segregated and creating different picking and packing. So for example, I see the same customer here, Sunflower Company. They have the same quotation date, same amount, same USD. Did they actually want two quantities here, or did they only want one and was double entered? And also, if two people get the pick, pack, ship, are they picking and packing them separately and then sending it off, or should we combine them together? So with information like this, I can immediately see information and realize what's going on.
Oh yeah, and the best part about pick, pack, ship in Deskera is that you can do it using your mobile phone. You don't need to carry any device, anything, no barcode scanner needed, nothing. Just use your mobile phone. You can use the mobile phone to do pick, pack, ship. There is an inbuilt barcode scanner that allows you to just go ahead, scan the item, and it is updated into your pick list. And it will show up as picked, and it will automatically keep updating your pick status so that when you're packing it, you save a lot of time, and obviously, you don't have to invest into any expensive barcode scanners, etc., pieces of hardware that you need to maintain, and RFID scanners and all of that. Just use your mobile phone to do everything.
Just give me a second. I'm just entering this studio now, so I can connect to my mobile app and I can show it to you.
Oh, wonderful! Yeah.
So just give me a quick second to connect to StreamYard and join without mic and cam, display name. Okay. All right. So I've joined with my phone. Now let me see if I can, what's it called? Cam, mic, chat. Where's the wonderful share button? All right, I'm having trouble finding the share button here. Is there a share button here or on the mobile app?
From the screen, can you?
All right, so let's just maybe continue, and then we'll look at on this screen, and then we can also try to figure out how to get on the mobile app. But so far,
We can always we'll put a video of how we can do it using the mobile in the description.
oh yeah, that'll be good. So inside here, I can see my different orders. So for example, if I want to click on this order, we can go and click on it. So let's do pick, pack, ship first. So let me go to Austin Circuits. Let me click fulfillment. And let me go pick, pack, ship. Inside here, I see if I have sufficient quantity, my invoice, create date, ship date, buy. I can click the three dots. I can generate a pick list. I can see my warehouse and the available quantity, and I can save.
And if you change the warehouse, then you will see the quantity available for that warehouse as well.
Definitely.
So,
if you don't have enough stock in the other warehouses, it'll show accordingly. So for example, let me go to pick. Let's pick here. And then, for example, you see the 19. Yeah, I'm not able to change the warehouse after I pick it. So I can input the quantity here, and you can see the scanning button here as well. Click save. And now it's picked. Let's go to packing. I can click pack, and this is where I can determine if I want to have multiple cartons. So for example, if I want to have 2 cartons, 5 in each, I can click here, add new carton, and pack it on up. And you can see the remaining quantity drops down to 0. After that, I can click the 3 dots, and I can ready to ship. Inside here, I can click ship, and I can select my cartons. So I can actually choose my delivery. Is it a courier service? Is it a pickup, or is it a drop-off? And if I choose courier, then I can type in my courier name, for example, maybe FedEx, tracking number, select the box type, select the length, width, height, and weight. I can mark it as fragile and mark it as shipped. And then I can always go to my second carton, put in the delivery. Again, if it's courier, put in the name. Also, I can select carrier name here as well. So for example, if I want to, I can select FedEx, and you can see the others now gone as well. So it's up to you. If it's other, you can type it in, or you can select the predefined ones here as well. You can select the box type again, put in the length, width, height, weight, and I can save it.
So, David, I have a question for you. If, let's say, I choose FedEx or UPS, etc., as my carrier, right? Then how can I track if the items have been delivered or where they are? Because my customer keeps calling me and they ask me where the goods are.
Well, I would just go to the app screen, click on FedEx, and click on Get the App. Then inside here, I would see what's going on based upon my tracking number. And then see it. Yeah. So inside here, I can connect to FedEx. We have UPS, and then we can show it accordingly. That way, I can track my order and see it.
Awesome. Thanks, David. Yeah, let's move on to the next point.
All right. So inside here, I can mark this as shipped. And of course, I can select the second carton and mark it shipped and saved as well. And you can see the ship button here. So that way you can just ship it right on off and save it and shipped. And shipped.
Can we see
Dropship?
dropship and back order?
Sure. So let's go here to Awesome Ideas. Let's click on here and let's click on Fulfillment. And let's click on Dropship. Then we're taken to the purchase order, and this is where we can change the vendors. So for example, it's not going to be, my customer's not going to be selling me the same thing as the other one, of course. So for example, I go and select my vendor here. So maybe I'm selecting, let's see, David's PCs. And then I can change and update the price accordingly to whatever it is. So for maybe, definitely not more than the purchase price. So just to give you an example, I'm just updating on the screen. And then everything's updated, and then I can save it. And then you can see David PCs are here, and then I can go here and I can receive. So just quickly to let you know, inside here, it shows not received. And if I go to the cell, you can see also this is not fulfilled because it only gets fulfilled when Dave's PCs get fulfilled. So for example, let me just convert this to a bill.
So once you fulfill the order for your customer is when your receipts will be also updated.
Of course.
Because you're not actually receiving any goods, right? What you're doing is, I mean, what you want to track is that whether the order has been fulfilled for the customer or not. You're never actually receiving any goods in dropship, correct?
Correct.
So what will happen is, now in a typical accounting system or inventory system, how you would do it is that you would create your order, then I mean, you will have your sales order or the quotation or the invoice for the customer, and then you will have to fulfill it separately. Then you will also have to create a purchase order that you will have to fulfill separately or mark as received, etc. And then you will have to do, stock adjustment, etc. to get rid of that on the same date, so that you do not show that inventory actually in your warehouse. But with Deskera, what happens is that, as you saw, when we chose dropship, immediately the purchase order option was was made available to you, right? And as soon as you choose dropship, you immediately create the purchase order for your desired vendor, and then you place that purchase order with them. And now you don't have to record any movement on the purchase side of the goods at all. All that you need to do is that you need to check. I mean, you will have a mechanism, right, to check if the goods have been sent over to your customer or not. And as soon as that happens, correct, then all you need to do is you need to record the fulfillment in your system, and that fulfillment will automatically close your open purchase order that you would have for sending or drop shipping the goods to your supplier, to your customer. So you don't need to do multiple steps here. You just need to create your record your fulfillment, and that will automatically close off your purchase orders as well. And you can obviously, then bill them or pay them, etc., as the need may be. So that's dropship for you. Now, back order, David will show us how back order works. Back order is useful when you have hit your reorder level, or when you have hit zero stock, for example, and you receive an order, but you don't know that you do not have that quantity in your warehouse. Because, hey, let's face it, I mean, you're not looking at your inventory report, 24 hours a day. It's only when you're doing transactions, correct, that you want to be aware of whether you have inventory available or not. So if you are creating a sales order or an invoice, and you want to, for any customer, the system will prompt you that, hey, you do not have enough quantity available for this. So do you want to create a back order? And then you can immediately create a back order on the fly and send it to your supplier. and David will show us how that works.
All right. So for example, let me just create a new quote. All right. Now let's add a contact, because it'll inform you on back order at the creation time. So that's why I'm doing it like this. So for example, Minnie Mouses, add in here, $10. And then I can see all the information, and then I can just save it. And then this will pop up. Quantity added is more than available quantity. Do you want to create a back order for this quote? And I can save and create back order. After that, it takes me to the order screen. I can then go and select my order. So for example, maybe I'm buying it from Gym Laptops. And I see the quantity here, and I can see the unit price here, and I can save it. The key thing is this is just a back order. So when it's a back order, it means that when I receive the goods, it's going to be received into my warehouse. It's not going to be received somewhere else. So you can see it's received into my warehouse here. And then when I go to sales, I have to fulfill it. It's not automatically fulfilled. So for example, I go here. I can see my quote. It's unfulfilled. You can see here this little button, back order. And I can click on the 3 dots and I can click fulfillment. So unlike drop ship, it's actually going into my warehouse. And then from my warehouse, I'm sending out to the customer. It's not going from the vendor directly to the customer. It's actually coming to my warehouse, and then I'm sending it off to the customer.
So about back order process. So how Deskera helps you with better back order management is that once you have why is back order important, right? Because you may be following just-in-time inventory that if in case you're not able to follow dropship, correct? Because maybe the supplier is not willing or the customer is not willing, the customer wants you to review the quality before they send it over to you, or if you have concerns about the quality, or whatever. There can be multiple reasons why dropship is not possible. And if it is not possible, then the next best thing is to follow just-in-time inventory, and back order is a useful mechanism to do that. What you're doing basically with just-in-time and the back order functionality of Deskera is that you are placing or getting inventory or procuring inventory or stock only when you have a guaranteed demand for it, right? So what you're doing is you're matching supply and demand by using just-in-time inventory plus back orders. And how Deskera helps you do that is that you create your quotation or your invoice, etc., with the available inventory, and then the system knows that, okay, you do not have this quantity, so you create a purchase order, you send the purchase order to your supplier, and this invoice or the quote is linked to that purchase order now, which you can see by that icon that shows that there's a back order there. Now what will happen is that you will only fulfill this order, this quote or invoice, when you have received those goods from your supplier, because you're maintaining a one-to-one connection between your supply and demand. And that one-to-one connection will allow you to not have excess inventory at any point of time, or even you will never be like short stocked or overstocked, because you're keeping just the right amount of inventory that is enough to fulfill the number of orders that you have. And what will happen is that once the supplier sends you the order and you record a good receipt, when you record the receipt of those items in your warehouse, the system generates a notification email that tells you, hey, you have received this back order that you had created for fulfilling this customer order. So now you have enough quantity to fulfill that order now, so you can actually move it to either pick, pack, ship or direct fulfillment or whatever. And boom, you get the inventory, you get the notification that you have enough stock now to fulfill this order, and you go into the system and you fulfill that order and you send that to your warehouse manager or whoever, and then they pick, pack, ship and they send it out. So you are not using up excessive space. System is keeping you on your toes by letting you know that it's time, you have received the necessary items to fulfill this order, and you're maintaining just-in-time inventory. So yeah, David.
All right, so we showed back order, we showed pick, back, ship, we showed drop ship, we showed the reports. Let's see. Oh yeah. So one thing, if you have a large warehouse, let me just click on the apps. We also have here our stock adjustment as well as our stock adjustment as our stock transfer. So this is also key when maintaining a warehouse because you're dealing with bulk orders and bulk quantities, and it's good to know how much quantity you have. So when you do a stock transfer from one warehouse to another warehouse, you need to know how much is going from one location to another location. And the other one is your stock adjustment. When you do the stock count, you'll know how much quantity the system says you have and how much quantity is actually in your warehouse. This is good also to check and make sure that nothing has disappeared. If you see some irregularities, something going on that looks weird, like all of a sudden, okay, my system says I have 100 laptops, but all of a sudden there's only 99 laptops or 95 laptops, and Jimmy looks like he has a wonderful new laptop all of a sudden appear out of there, then you know something's maybe a little bit off. So it's very important to do your stock adjustment, know your stock quantities, and if there's any adjustment required, you can see if there's anything weird going on.
Right. So stock adjustment and stock transfer, right, together with cycle count is an important process that needs to be followed. What is cycle count? Cycle count is effectively doing a physical reconciliation of the inventory that you have. And that allows you to be on top of what is actually happening versus what is supposed to happen. Whatever that is supposed to happen or should have happened is what your system is capturing. But if anything else is going on, then this reconciliation process helps you to identify that. Now, it's not always, that, as David pointed out, it's not necessary that Tommy got a new laptop all of a sudden. No, that's not always the case. It could be just because, goods, items go bad, they expire, they're out of circulation, or maybe you want to, you have given away some items as a gesture of goodwill to someone. Right, and all of that needs to be accounted for. Sometimes the system, people fail to update that, and a process of having a regular cycle count or physical reconciliation of inventory is therefore important. If you're not doing that, then you may be bleeding a lot of money without even knowing.
Suddenly you're giving everybody all these wonderful gifts, and then all of a sudden you realize that's an additional cost to your product. So here's a free mug, or here's a free mug, or here's a free laptop, or here's a free, phone or something like that. And all of a sudden the cost you usually have all of a sudden increases, and the inventory you have that you think is there may just disappear.
Awesome. Thanks, David. Now, let's take a look at our website builder, e-commerce store, and CRM, especially the email campaign part, because that is important for you to grow, to reach new markets. And Deskera has the complete suite for you. We don't just have an awesome accounting and inventory management system. We also have a website builder. We have an e-commerce store. We have a CRM that will help you to expand your business, reach new customers, and do better marketing. And David will show us quickly all three and how they are used.
For example, I just clicked on, and if you want to go check it out yourself, you can click on your shop here. It takes you to Deskera e-commerce builder. And inside here, you can view your orders, payments, and publishes. I can see add products. So I can go to my orders here. I can click on my products. I can see my products available, my buttons, and my extremely expensive apples. But of course, you can list them or delist them, and you can add your products here as well. Inside settings, you can link your payments to Stripe, so that way they can pay online through Stripe, and you can learn more, and you can link it here. And of course, we have our site builder. So for example, I've already opened it up over here. So you can see in here, this is your web page. You can see all the information like winter collection, new 2020. So you can set it up accordingly here. And if you are a bulk supplier and you bought from the manufacturer a large amount of, for example, jeans, then inside here you can say, we have a bulk supply of jeans, we have different tiers for it. We can put all the information accordingly. We can have different tabs. For example, I can see my products if anything's listed. I can see my apples here if I created anything Apple information, buttons or shirts information here. So it's all here, and I can save, and I can also go and publish it. I think this is right. Yeah. So I create my subdomain, and I can enter my custom domain here, and I can create it. So that's where you want to publish it. Next, let's go to CRM. So inside here under CRM, this is where you can do your email campaigns. And that's key features that we have. Of course, your contacts, and you have your segments. So you can set up your segments differently based upon your different types of requirements. And based upon that, you can select who you're sending to. So for example, you have different watches that are there. And so sorry, you have your different watches that are there, and they may have different brands. You may have different tiers of who you're trying to market to, and then based upon it, you can see it accordingly. And that's also very important who you're targeting. So for example, when I was a young kid, I had a wonderful digital watch that had a calculator on it. You type in the calculator, you can do math formulas and math information, where now I don't. I have a different type of watch. So it all depends, and people have digital watches and everything.
So running email campaigns, actually, we did a webinar earlier on that, wherein we covered best practices on running good email campaigns. So if you have not watched it, then make sure you do. It's available on our YouTube channels. So I remember some best practices that we discussed there, and maybe this is the right time to talk about that, because we are talking about growing your business. And as I said, email is one of the best ways to grow your business and to reach new audiences. In fact, the ROI that you get on email is considered far superior than the ROI that you would get on ad spend and social spend and whatnot. So, so if email is not a part of your strategy, then it ought to be. And some of the best practices about email campaigns are personalize your email campaigns, right? So when in Deskera CRM, for example, if you are setting up an email campaign, right, you can personalize based on the list that you upload. You can personalize the name, the industry, the type, etc. I mean, personalization of the email messages that you send out as part of a broadcast will have higher open rates than the average open rates that you would encounter otherwise. And just for your reference, the average email open rates across all industries globally are around 20% or so. And with personalization, people have seen an improvement of even up to 7 times better open rates compared to what you would see without the personalization of the subject and the topic. So another important thing to consider when you're running email campaigns is segmentation, as David was talking about earlier, wherein if you do proper segmentation, then you can send better content to your target audience, correct? I mean, think about, I mean, it kind of works together. That is segmentation and personalization. They kind of go hand in hand. You don't want to do one without the other. And I mean, you get the best possible results if you do it together. So let me take an example, right? Let's take Deskera's example, correct? Let's say I want to run an email campaign to attract folks to sign up for our product. Now I can run a generic email campaign that is just asking businesses in general to go and sign up for us. But I can but if I were to segment my audience first, that is, let's say I segment my audience into wholesale traders and into IT businesses and consulting and service businesses, and then I reach out to these audiences, and then I personalize the content of my email, the subject of my email according to the segment that I've chosen. Then I am going to get better results. I mean, this is common sense, right? But data also backs this common sense. So this becomes an axiom, so as to speak of, right? And that's what you should be doing when you are setting up your email campaigns. And as I said earlier, with Deskera, you can set up your email campaigns. You can run and broadcast email campaigns. If you have not done this already, then go ahead, sign up, and start an email campaign yourself, right? And I don't know if you have already seen our tutorial videos or not. David, maybe you can just show us the YouTube tutorial section, and we have multiple videos there to help you in setting all of this up, right? I mean, running email campaigns, setting up your inventory, doing pick, pack, ship, doing drop ship, back orders, everything that we discuss here. All of that is covered in great detail on our YouTube channel. And David, if you could,
Oh yes,
yeah, just shows the YouTube channel. Then and we'll since you're watching this video, then chances are you are already on our YouTube channel. But if you have not seen these other videos, then yeah, I mean, there is a tutorials playlist. Just go there and you have everything there, including how to set up your forex and gain loss and transfer rates and whatnot.
Okay, 1 second, just asking me to sign in.
It's okay. You don't have to sign in. You can just go in.
Oh, just go to Deskera channel. Okay,
Just
yeah.
go to the Deskera channel. No need to sign in.
Yeah, you can see me every time I go in. There's like sign in, add something, something new inside there. All right, so inside here, I'm going to the Deskera YouTube channel. And of course, we have our home. So I can see you. Wholesale business, 5 biggest problems and their solutions. Yay. And you're live. Excellent. So I can see the Deskera tutorials. I can see customized email template, multi-factor authentication, connecting to Microsoft 365. We can search the channel. Let's see, search the channel. Let's search for campaign. Create a campaign in Deskera CRM, all in one quick walkthrough. So you can see this information here, quick walkthrough to Deskera CRM, support page videos, Deskera demo videos, so all the information.
Yeah. So all the details are here on our YouTube channel. So if you have not subscribed to the channel, please do so. We are updating content on a nearly daily basis. Plus, you will get notified about all the future streams that we are going to do. So make sure to tune in. And with that, we'll bring today's broadcast to an end. David, thank you so much for joining me, and thank you everybody else for joining us today. On this day of Hari Raya and Eid, and being a part of this webinar.
Yep, thank you again for joining. Hope you have a wonderful and blessed holiday.
Thank you.